Kenya's real estate sector is notably one of the fastest growing in the world. If the performance in the first quarter of 2013, after a peaceful conclusion of the general elections, is anything to go by. I caught up with some of the stakeholders for more on this sector. The concept of ultra-modern cities like thicker greens, among others, is quickly gaining traction in Kenya's real estate sector. Development of such cities, though a welcome approach in decongesting already densely populated towns, demands for meticulous planning.
The dynamics that are involved is, one, there has to be availability of land. Like, for instance, we have 1,700 acres of land. It's very unusual to get this kind of land next to a major infrastructure like the superhighway. So that location to us is a milestone. So what we did is that once we got the location, then we started planning. And what we are saying is that we want to set a model of what it takes to plan a nice town. We'll have a shopping center, a big mall, a big shopping center next to the highway. We'll have a retirement village, we'll have hospitals, we'll have 2 schools, and we'll have a police station, we'll have churches. So we are self-contained, settled down.
Situated approximately 40 kilometers from Kenya's capital, Nairobi, these projects are leveraging on continued infrastructure development by the government and in return encouraging investment.
The fact that the government have sort of slackened in developing the infrastructures like that are necessary, that is the sanitation and all that, then I think there was created a void where the businessmen have come up and they are now developing what the government or the local government institutions should be giving us. Then the second one is that there are cities within cities, there are gated communities. There is the sense of security that when you are within such confines that you feel that you feel comfortable.
According to a property index by Haas Consult, with the general elections out of the way, the sector is among the fastest growing and offering the highest rate of investment return on the World Bank real estate rankings.
I mean, there are lots of signs of hope. Economic growth is the most important thing. Our shilling is less volatile now, our inflation is much more subdued, and there are a lot of investors who are holding off because of the election fears, and we have now had the peaceful election. So for many reasons, we do expect the real estate sector to start moving again.
Owning a home continues to be a dream for many in Kenya, but with skyrocketing mortgage rates of up to 28%, this impedes on ownership. In 2012, banks reported a cumulative net profit increase to 75 billion shillings, up 20% from 2011, with a bulk of this profit being interest income, according to a report by RSM Asheville.
Kenyans like owning the houses that they live in, so I would expect that as the developers go on coming up with such beautiful projects as Thika Greens Limited, the Gulf cities and all that, there are a lot of people who are going to come up and would like to own these properties. And the chance for the banks and the financial institutions is to remodel their mortgage packages that will probably be much friendlier to the clients.
What we had happen was the rates nearly doubled the base rate, and the mortgage rates almost doubled too. But when the base rate came down, the mortgage rates didn't come down by nearly as much, and we have now typically a 10-point spread, which means that for instance, our base rate is, even with minor adjustments, is moving between 9 and 10%, whereas our mortgage rates are up at 19%. The average is around 18. So you're getting a full 10 percentile point spread between the money that's coming on base rate and between what customers are paying, mortgage borrowers are paying.
Players in the industry are calling for intervention on the mortgage situation, with developers going back to the drawing board to creatively package their products in a bid to attract clientele.
There are things that can be done. A suggestion is that we help with the financing, various bond schemes to cover the cost of infrastructure on developments. That's about 20 or 30% of the cost. So if the banks cannot be persuaded to bring down their spreads. Another option is to try and intervene to bring down the financing costs for the developers and bring down the ultimate prices of the houses.
We encourage our financiers to do what I would call backward integration, as in they come in and finance using the same property as a security. And we are working well with some of our financiers. So you can buy a property, for instance, just before you develop, you want to buy, banks will give you money to buy, and they will use the same land as a security. If you want to develop the same land, you go and get a development loan.
As the year unfolds, investors and experts alike anticipate that continued prevalence of a stable political environment will help steer this critical sector's growth and inevitably contribute to the country's economic progression.
We are likely to see some upward price movement in houses within a year or so, because we now have a bottleneck on the supply side. There was a lot of developments where phases were slowed up or stalled because financing costs got high ahead of the election. So that takes a year or two to play out, and you start to get to a point where people are searching for properties and they're going to have to wait for new property to come onto the market.
Now that the government in the last 5 or so years have been opening up the country with new infrastructures, the roads and that expands the market, and I see a lot of people now buying into the markets, into the property markets, because now there are better roads to take you to wherever you own your property. So I see a lot of growth.